The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the August 17th magnificent Monday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Of course, said another way, if you live in your past, there is no future out there. Hope everyone out there had a magnificent, fabulous weekend. Great to be back with you. Of course, let's make sure we do everything we can to have an extraordinary day, an extraordinary week. The easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to throw at us. Today, we'll go take a look at the circumstances of the bulls and the bears, the buyers and the sellers. We'll go see what they're trying to communicate to you and I. I'm absolutely grateful for your presence here. I'm honored by your presence, and I'm here to serve you. Feel free to pick up that phone, dial on in at 877-927-6648. Of course, internationally, you can reach out to us at 727-445-1044. This is Magical Monday. Of course, it's Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trade up 65 points at 17,543. S&P's up 777. Looks like that's a jackpot winner out there. She's trading at 2099. Nasdaq Composite up 30 points at 5078. Russell 2000 up about 9 points at 1221. The DAX finished the session off 45 points at 10,940. The FTSE was flat. 65.50 is where it finished. Goldilocks is up $6. Silver's up 8 pennies. Light sweet crude back 19 cents, leading the charge the upside. You got Priceline, Tesla, Asparian Therapeutics, Global Blood Therapeutics, Zoo Liliana buyout there. To the downside, Estee Lauder down about 6.5%. Alliance Data Systems, Shire PLC, Astronics Corp, Chicago Bridge, and Iron also trading to the downside. So where do we begin our show? I think what we need to do, what we should do out here, is the following. Let's go take a look at short term, then kind of midterm, and then a little bit longer term out there. Well, actually, let's first get a feel for where the markets are this way. So let's put it together this way. Let's go take a look at the summation index again and the price oscillators. Again, these values have more meaning at 4 o'clock than you do at 1:10 p.m. But nonetheless, it helps to give you a perspective as to exactly where we're at inside the market. Now, if we take a look at the New York Stock Exchange, that's my left-hand panel, dead center, Nasdaq Composite, and the right-hand panel is the Dow. Left-hand panel, right-hand panel, New York Stock Exchange and Dow, both their price oscillators finished above zero on Friday. What did that mean to you and me? It meant that the buyers were the ones in control of the market. Not so fast when it came to the Nasdaq Composite. They needed, 110, 12, 18, something like that, something relatively small as far as net advance and issues by day's end in order to get their price oscillator up above zero. What happens when that takes place? Well, your summation index, which is a trend-based tool, that rises, and that gives, if the trend is your friend, this is a great trend-based tool out here. So we have the New York Stock Exchange, which has been above the zero line. Buyers have been in control of the New York Stock Exchange. Believe it or not, I know this will just blow your mind, but they've been in charge of the New York Stock Exchange since July 29th out there. They've been below that zero line twice, and they've only lasted below that zero line for one trading session. When the oscillator gets below that zero line and then back up above it, we'll go ahead and explode that New York Stock Exchange chart up here. It's what's referred to as a simple structure. That's how Sherman McClellan took a look at it. And what it really means is that sellers never had control of the New York Stock Exchange. We don't need to complicate the meaning. We just need to take a look at it and say, hey, what does this mean out here? Now, in the case of the New York Stock Exchange, it says it's likely going to head up to about the 10,897, 10,925. You're probably tired of hearing that from me. Really, what it wants to do is probably get up between now and middle of next week, something like that. Get up and test the top of that descending price channel. Now, the good news for the bulls, bad news for the bears at 1:11 p.m. is that the NASDAQ composite price oscillator now above zero. It's taking on its 50-day exponential moving average. I believe that's at 5,079. So if it can close above, well, it's actually, where is it? It's at 5,076. 5,077. Closing above that's good. That says price gets back to its resistance area of about 51.83 out there. I would say that's a really good target as to where price ought to head to inside the NASDAQ composite. That's under the assumption that, in fact, we see a positive close like this. Anything can happen, right? The Dow is down. I didn't even see exactly the numbers because I was too focused in on waiting for a pattern to set up on the ES Mini to take the long side of the trade. And that came in and boom, went ahead and took it. But let's go take a look at so that's on a daily basis. Now let's go from daily charts. By the way, the Dow, just so we take a quick peek at it, price oscillator up at a nice high level, highest level that it's been at, since looks like around July 21st out there. The Dow is going to head back to about 17,824 before it really provides us with the next message. That's the way that things should play out. And quickly, if we take a look at the VIX index, below the 50-day exponential moving average at 1313, continuing to chop around here and not really moving substantially lower, but just staying in this level here. That's more bullish than it is anything out there. If the VIX really starts to drop, then we can expect some of these real choppy, potential larger choppy movements, and much like this morning out here. Now, let's go switch over and take a look at an ultra short-term chart. Let's take that ultra short-term. Let's take a look at a 10-minute chart here for the ES Mini. And when you take a look at this chart here, we've got the volume at the bottom. We come back and take a look at volume in a minute. But when you take a look at this chart here, one of the things that first, when you take a look at any chart, you and I, we're pattern recognition specialists, experts, masters, whatever it is, the adjective that you want to use to describe what we do. But what you and I do out there is we're all about patterns, right? We're all about trying to identify those patterns. And the ones that jump out you at first are the ones that you go with. Now, when I take a look at this chart here of the ES Mini on a 10-minute basis, what jumps out at me first is that above the highs out here, right, we see we had a high that took place on August 13th around 2:30 in the morning. We see another high out here that acted as resistance right around 3 o'clock in the morning, and that was on Friday. We can see we had a cluster out here, a cluster between about 11:20, 11:30 or so during lunchtime. We finally broke out, or it finally broke out around 12:50, just before we were coming on the air out here. So that's the first line of demarcation that shows up for me when I take a look at the ES Mini. It should for you. So we're above that level. Now, the second line of demarcation that shows up for me is at the bottom, right? I see a very clear, on a 10-minute chart, a very clear, what looks like a consolidation pattern. That is trading between 2074 and 2093. Now, what you and I know as of 114 is that price has broken out. I wouldn't say that it's broken out with volume. We're into summertime trading out here. Last time, now it's broken out with volume compared to the swing points that were up there, but that was easy to do. This was being, these swing points, in essence, were created around 3 o'clock in the morning, 2 o'clock in the morning, 7,500 contracts on August 17th. The breakout here was with 23,000 contracts at 12:50 to 1 o'clock. The first time up was with 32,000 contracts, so it suggested that it was going to try to break through that level. It has. Now, when we go ahead and we move this back, what this tells you and I is that there's a approximately 19-point consolidation. We don't need to get it exact. You and I are using this as a guideline. What does that mean when price breaks through a consolidation? What it does is it gives you a measured move. It's one way for you to identify a price projection. If you're in the trade, such as I am, you go ahead and you move your exit point. I originally had it at 2099. I went ahead and moved it up to, it says 2109.75 on my screen out here. I think if we take a look at the actual consolidation mathematics of it, it gives us 2112. So I've moved my stop to below the 2112. I'll just continue to assess this and, assess it when we get off the show out here. Now, likewise, if price ducks at any point in time, ducks right back below 2093, which is still above my stop as I take a look at it, then that says we may have a false breakout. So if we have a false breakout, guess what? It says that price can go all the way back down to the bottom, 2074. And if it breaks that out, you've got your same 19-point consolidation pattern to the downside. But what you and I know right now, just looking at a 10-minute chart, is we have, or we may have, a consolidation breakout. What we actually have is a consolidation breakout. It's not a may. We actually have it. Not until price gets back below 2093 will that pattern suggest that this is a failure. Now, if we just multiply times 10 and we go up to that 300-minute chart, Friday, when we looked at our show, I don't know, maybe it was when I was doing Tom's show, maybe it was this show here. What you and I did was we went ahead and we took a look at these descending price channels out here. Let me go ahead and turn off all of the TAS market profiles. Give me a moment to do that. We'll just clean up the chart. There we go. So now we have a 5-hour chart, a clean chart here. And what price has also done on a diagonal basis is it has run into, it's actually surpassed the resistance line. Now, I'm not using a trend line. If I were going to use a trend line, it would look like this. We'll just make that a red arrow. I would use the top of the candles out here. So there's a trend line. So we can see that price has broken through both a trend line as well as a channel line out there. Now, logically, where should price find some resistance on a 5-hour chart? Right up here at this swing point from about 3 o'clock in the afternoon on August the 10th. That price level is 2101.75. Maybe that's all she's got in it. I don't know. Here's what I do know, though. Price, and if it can close this, by the way, this session here is 2 o'clock, 10, and 3 o'clock is when... yeah, it's using the Globex hour, so it looks like it is a 3 o'clock time frame when this session closes. So we're still too early to understand on the 5-hour chart whether or not price is really broken through that descending price channel. But here's what's real clear. You get price to break back down below that consolidation level. It's a price on the 5-hour chart is going to go ahead and break back below, or it will never have, in essence, probably by 3 o'clock, never will have closed above the descending price channel. And that says, hey, trouble in River City. Trouble in River City. What does that trouble lead you to? Right back down to those lows, where we were this morning, where we have been in that consolidation pattern. So that is the 5-hour chart for the S&P. If we go take a look at the chart, maybe that is providing us with the most information. Not that the ES Mini is providing us with a lack of information out here, but it would be the Dow. And why is it the Dow? Because what it actually did going into the close on Friday, which was pretty, actually, I think it was also after the close. Was it after the close? No, was it the close on Friday out here? Is price inside the Dow futures contract, and we're looking at a 5-hour chart here, did close above its descending price channel. Now, whenever you break a line of resistance, what you like to see, bullish or bearish, what you like to see is price come back and test that area. Price came back and tested it on 3 occasions, with this morning's open being the largest occasion of all. And price is above it. Something to think about. Steve Rhodes with TFNN. We get back. Let's go finish up our analysis of the Dow 300-minute chart. We'll be right back, folks. Hi, I'm Steve Rhodes, host of The Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
TigerTV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. TigerTV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 63, S&P's up 8. Let's go back to the 5-hour chart, the 300-minute chart out here for the Dow futures. So we know that the Dow broke through its descending price channel. We know that we know on a daily basis, right, the Dow price oscillator is above zero. Says buyers are in control. We come over, we take a look at a 5-hour chart. We see that descending price channel. Price is broken out above that. That's bullish, not bearish. We see the price also came back and tested that level. Tested it here at about, 9:30 last night. Again, in the next 5 hours at 2:30 in the morning. Of course, at the open this morning between, say, around, 9:30, 10 o'clock. I can't remember exactly when prices got to the lows intercession, but price came back, tested it, and rejected it. Now, there's some horizontal levels of resistance out here inside of the Dow. Just taking a look at candles, one of those first places being 17,595. You've also got a swing point below that from August the 10th. That's out at the 17,573 level. So that's some horizontal level of resistance. We'll see how it handles it, assuming that it can get up there. If we take a look at our TAS market profiles, we put those back on our screen out here. Let's turn off a couple of them. Let's get rid of some of the clutter. So let's turn off the 60 minutes. We've got the 240s out here. You're up above resistance on that. So let's go ahead and turn those off. And what we have out here, well, we've got the daily and the weekly that we can take a look at. So as we take a look at the daily, the point of control area, 17,540, was it 17? Now you move this over here so that you can actually see it. It's 17,540 is the number. It's 17,502. So it should not be a surprise to see about another 40-point move inside of the Dow futures, and then maybe even just camp out around that level. If for any reason it can move above that with some type of wide-ranging bar, some other type of conviction, then the anticipation, the expectation ought to be looking at a price point of about 17,692 as far as where it would make its run out there. So that's on the 300-minute time frame. On a 10-minute time frame out here inside of the Dow futures, not the same kind of consolidating pattern that you and I took a look at when we looked at the S&P. Along the bottoms, yes, 17,300 is a real key level of support. We saw that tested back here on August the 12th, came down, tested that level on August the 13th, and then again this morning as price was moving back into the 10 a.m. time frame, it was moving right back into that same area. So 17,300, critical level for support inside of the Dow, but not the same across the top. Really across the top, all that we really can see out here is more of a diagonal rising trend line. Price is broken out above that, but kind of lack of words right out there. I'm not going to use that as any real big. The bigger indicator is really the 5-hour chart out here. Now, this helps us to just more clearly identify support inside of the Dow. Let's switch over and take a look at what's going on inside of the NQ out here. Remember, today is its first day, or the NASDAQ Composite's first day above the zero line, at least as of 1:27 p.m. And if we take a look at its chart out here, now this looks a whole heck of a lot more like the ES Mini, right? Along the bottom here, you can see at the 4,500 level, 4,500-ish really, becomes the bottom of support. Price this morning didn't get down to 4,500. It got down to a low of 4,503. Close enough for our line of work out here. If we take a look at the top, the top says 45.57. You're trading at 45.58 right now. So perhaps the next actual message for you and I with regard to what the intentions of the markets are is going to come from the NASDAQ out here. And what it's doing in this 10-minute bar as you and I speak, and that's really just one of the areas of a potential consolidation, because you really could make the case that the consolidation is more likely at the 45.51 level out there. So you've got more of a conservative, more of an aggressive approach. Hey, let's face it, you clear 45.57 out there, then no matter how we slice and dice this, what you're going to look at is somewhere between a 51 and 57 point consolidation pattern. What that says, the measured move then inside of the NQ takes you into the 45.51 and 40. How did I come up with 46.14? That is clearly a brain fart out there. It's not that. You got to add 57 points. So 45.57 is the number. No idea what Stevie was thinking when he wrote that in there. But I'll just type it in right now if I can. 45.57, and that would be the breakout projection. Now, consolidations, measured move patterns are equal to or greater than. Got to underline that. So, and you've got to be taking a look at price as they come into those areas, assuming that, in fact, they can get up there. So as we took a look at 3 of our charts out here, we didn't get a chance to take a look at the Russell 2000, but I'll put that on my screen here right now. And what you're going to find here is the Russell 2000 broke above its consolidation quite a while ago. And what does that say to you and I? That says you've got a price objective of 1227 on it. Another 7 points to the upside. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pezzavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 71, S&P's up 9. Let's take a tour around commodities, currencies. We go back, take a look at some individual stocks, ETFs, things of that sort. If we go take a look at Goldilocks, see what gold is doing, up about $6 right now, trading out at 11.18. Let me see if my market profiles here will pop up on the screen. Thus far, what do we have inside of gold? We've got a nice little bounce off of the bottom. We have a new market profile that established itself today. From the bullish side, you'd love to be able to see it take out that resistance level of 11.25.10 out there. That would be very bullish. That would, really open things up to boy, it really opened things up all over the board here with regard to market profiles. What it would then do is you just start taking a look at retracement levels. We can see that price made it to the dead cat bounce, the 0.382 retracement level. That would say to me that if we can get a close above this 1125 area, you're looking at 1156 as the next move inside of gold. It could pull back, and if it pulls back, expect to find support around 1085, 1094 inside the current contract. But thus far, sideways-ish move out here, not overbought, so it doesn't really need to move sideways. It's come back and it had tested on Friday a support level. It's TAS market profile high support level on a daily basis. So it looks like, as Tom likes to say, it's just building cause out here to take out the highs. That's what's going on as we take a look at the gold contract. If we look at silver, up 9 pennies, trading out at 15.30 out here. What silver has done certainly took out its trend line. Silver backed off a little bit. Let's see, where did this actually back off to on Friday? Backed off to the top 15, the top of its weekly market profile. You got to like that, and that has held as support. So 15.18, as long as silver can hold that level, that's nice and bullish for you. As far as then its next move, if we just simply take a look at a retracement from its May 18th high down to a low on the trading day of July 24th, you're looking at 1647 would be its next move out there. That is on the silver contract. Light sweet crude, 42.37 is what it's trading at. It's doing everything in its power to try to form some type of buyable bottom. It's not in just yet. It's not in as far as I see it. It is getting near. I can hear we're gearing up for the Beverly Hillbillies Black Gold Texas Tea song out here, but we cannot go ahead and play it just yet. Could be that that doesn't occur until we see light sweet crude get down to about 40.57. Just a sideways move the last couple of days out here. So no confirmed signal. Actually, we might get a confirmed signal today, but it's not exactly the signal that I want. But it could be if we don't see light sweet crude move any lower during the day out. Well, I can't say any lower. What I should truly say is below 41.35 out there. But one step at a time. Quick peek in on the 30-year Treasury out here. 30-year Treasury has not been able to break its nice little rising trend line out here. Came back. I got some signals that said, hey, maybe there is a top that is in. And then I took a look at a correlation that said, hey, maybe not. Bottom line is, until this trend line is broken, I don't care what correlation I look at, there is no real confirmed signal out here. At this stage, you've got the 30-year Treasuries trading inside the August 12th swing point. That says it tests the high out there, 160.25. If we look at currency pairs, the euro, Japanese yen, your favorite currency pair in mine, what has it done? Well, this is interesting as we speak right now. We know that it broke out above that little shooting star candle that formed on July 13th. That is, well, it potentially was resistance, 137.79. Price did move above it. Today is the first time to come back and test that level. Let me turn off my profiles out here. If it can actually close the day above 137.79, and we had maybe a couple more days testing of that area, then that says to you and I, euro, Japanese yen likely heads to 141.05 out there. If it closes below this level, then it says, well, you've got some type of retracement or maybe reverts back to its little trend line that's out there. If we take a look at its trend line, it's something like about this, which would be a decent-sized pullback. Whoops. Let me see if I can actually finish drawing that in there. We'll just right there. There we go. And that would potentially put some pressure on the direction of the markets. But at this stage of the game, just testing support, much like when we looked at the gold contract. If we take a look at the euro versus the U.S. dollar out here, that is pulling back a bit. It is got an A to B equals CD. It looks like it's probably completed that. Let's take a quick peek here. Why won't it do that? Why won't it engage? There we go. Engage. There we go. Let's see. There's our A point. B point out here is on the trading day of July 27th. Your retracement, your C point down on August 5th. Yeah, it's completed the 1-1, but with a nice wide-ranging bar, a little doji candle. Price on Friday moved a little bit lower until now. The setup here inside of the Euro-US dollar, because of that wide-ranging bar and that doji there, it's really got two meanings here. It's got a bullish meaning and a bearish meaning. The bearish meaning is you've completed a 1-1 A to B equals C. You've got a little bearish engulfing candle on Friday because it was able to close below the low of that doji. You've also got the apples falling off of the tree a bit early because it's only August. When do they start picking apples? Not until maybe the end of August, early September, something like that out there. In any event, but you also have price trading inside the candle session from August the 12th. And within the next three trading sessions, if you get above, if you close above, if you take out the 1.115 level, you actually have a continuation move to the upside that says, hey, maybe the euro wants to try to get back inside its trend. So now you don't have that continuation pattern right now. So if I were going to say what's the actual meaning, you have to go towards more of a retracement and a pullback. So more of the, when I say bearish, I'm just referring to directionally out there, more of a bearish meaning than a bullish meaning out here. But any move above that candle session, conservatively, you'd use the high, which is 1.121 for a continuation move to the upside. On a aggressive approach, you'd use the body of the candle being that 1.156. So hopefully that assists you if you are trading the euro-US dollar currency pair. If we take a look at the Japanese yen versus the US dollar out here, not doing a whole lot. Not really providing you and I with a ton of information out here, other than you did have a key reversal or an outside day. It looks like more of an outside day than anything else. That was on August the 12th. So that's a resistance level, which is at 125.28 out there. But it's really not doing a whole lot to provide us with any additional information. Hey, let's go check in on Apple. I mentioned Apple's falling from the trees. Of course, there's nothing like going to the cider mill. Growing up in Michigan, and it is, they do grow lots of apples around there. They have those cider mills out there, and there's nothing like on a Sunday, on a cool Sunday, more towards September, October, right? Little football time, get some nice, fresh, cold apple cider. And then, of course, those warm donuts out there. How can you go wrong with that? If we go take a look at Apple, though, the actual stock itself, and we take a look whether it's making apple cider, it is back above now. What Apple did was Apple came back into a breakout area. So Apple's got a very bearish pattern out here, that island top reversal. That's on the trading days of July 20th and 21st. It's created that pattern a half a dozen times at least. Of course, we know all those have been taken out, but this one, maybe not the case. We won't know until it gets taken out. We have to respect the fact that it is a bearish pattern, but that also says we must respect the fact of what did Apple do. And what Apple did was it came back to a support level, a breakout area with lighter volume. As much volume as was in the trade on the way down on the trading day of August 4th, it was still light volume. That was 124 million shares going against 146 million shares. The support level, the actual breakout area, 112.48, has been tested, rejected. Now what is Apple doing? Making a retracement. If we take a look at where can that retracement take you to, well, the first place is the 0.382 retracement level of 118.55. The second level would be 124.05. Can't get to the second level till it gets to that first area, which is 118.05 out here. And you'll want to pay attention to volume. So far today, 29 million shares, relatively light, obviously extremely light compared to when it broke down on August the 4th. But getting a closing above closing above the price level in the trading session on August 10th at 119.99, that would say 124.05 would be in the cards for Apple. Otherwise, it could just be making applesauce. If we go take a look at some other things moving, let's go look at Estee Lauder out here. Let's go get a little makeup on and see what they were out with their fourth quarter revenues or profit declined. It's trading lower, massive volume is what it looks like so far, coming back into its own breakout area, almost creating. No, it did not create a island top out here, but it came back to its breakout area, which would give you the range of 8108 to 8381. The volume on the breakout was 6 million shares. You've done 7 million shares. I don't think this level is going to hold, and instead looks like it's going to come back to another breakout area. Estee Lauder probably headed into the 70.40 to 74.59 area. That only had 6 million shares. But until you get down into that area, it doesn't really matter. But likely, Estee Lauder is going to at least test 81.08. If it closes below that, I would anticipate 70.49 to 74.59 out there. A request to go take a look at natural gas out there versus classical gas. That is the one tune that I could play on my guitar was classical gas out there. As we take a look at natural, that's copper. You wanted actually natural gas. It would help if I actually clicked on the appropriate symbol. If we take a look at natural gas, now natural gas has been traveling with inside this cone, now getting towards the cone of silence, except for today. As we speak right now, it's breaking that trend line inside that cone to the downside. Trading is not yet over, but that's not necessarily a good thing out here. Natural gas is trading in. Is it trading? No, it's not trading inside. Looks like it is headed to. If it closes below that little trend line out there, looks like it's headed for the swing point from back on the trading day of June the 4th. That would say price point of 2.712 out there. Now, what you and I know is that natural gas, my recollection is that it doesn't historically, from a seasonal standpoint, bottom out. Let me see if I can. Usually I have these charts up, but I don't believe that it seasonally bottoms out until the September-ish time frame. But I'll look for that real quick. Oh, what the heck was that? I don't know. Let me see. File, recent. Give me one moment to see if I can get this on my screen. It's either going to be this one. Is it that one? Is it this? Yeah, there we go. How about that? You got to love the way life works. Actually, got life. The universe is taking care of Stevie as we speak right now. From this chart here is natural gas. Yeah, the early part of September, historically, is when natural gas makes its low out there. So the actual date is right around September the 10th. So, and then you can see it makes a real nice seasonal bottom. And that's when you want to, so between now and September 11th, 10th, sometime right around there, you do want to be trying to sniff out, looking for some type of bottom inside natural gas. Maybe it's a test of that swing point with lighter volume, that June 4th area. By the way, the bottom of that is $2.60. Let's go up to Milwaukee to speak with John. John, thanks for calling. Thanks for holding. How are you today?
Wonderful. Thank you, Steve. How about yourself?
Oh, I'm doing great. You're up in Milwaukee.
Well, I'm really in Kenosha, but most people don't know where Kenosha is.
Okay, Kenosha. So now, so tell us where Kenosha is. Kenosha, yeah, so tell us.
About an hour south of Milwaukee and an hour north of Chicago. So
okay, perfect. And, of course, if you would have gone an hour north of Milwaukee, it'd be in Kohler, where you could see the PGA Championship. Are you a golfer or just a sailor?
Just a sailor.
Just a sailor. Well, it was a great golf tournament, and you could have sailed and watched them play several of those holes along the water there, along Lake Michigan. But you wanted to take a look at TBT. So tell me, what you're doing and how I can help you.
Well, I'm trying to go up, and it's stalling.
Yes. So if we take a look at TBT, let me see if I can pull. I'm going to try to pull something else open on my screen here so that it opens. So in the case of TBT, and folks, is that the 200% or 300% ETF? That would be the short of the 20-year Treasury, John.
I think it's a two.
It's a two time. Okay, yeah. Perfect. Thank you for that. So one of the things, I had mentioned in taking a look at, I'm going to go back to the trend line here. One of the things that you need to see in order for that trade to work, as I put the T-bond futures, the 30-year T-bond futures up on my screen out here, there's a little rising trend line. And you really need to see it break through that in order for that trade to work. And it looks like at this stage here, bonds still want to move a bit higher to test the August 12th high out there. But during this break, if you can stay on through the break, I'll go find another chart that showed a potential divergent pattern out here, and let's go see if it still is in place out there. Can you hold on through the break?
Yes, I can.
Absolutely. That's great. We're going to go back to Kenosha, Wisconsin, and speak with John. We'll be right back, folks.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN. Everbank is a member FDIC.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's up 67, S&P is up 9. We're going back out to Kenosha, Wisconsin, and we're speaking with John. We're taking a look at his trade, which is the TBT. That is the ultra short for the 20-plus year treasuries out here. And I want to give you a couple of numbers here that you should be looking for. So if you are right on the trade, one of the things that will help you to get the wind in the right direction is getting above the 4470-ish area. That happens to be both the bottom of your TAS market profile daily number and a weekly number out there. So right now, the signal here from the market profiles is that you're going against the breeze here. But what I do want to show you is really two charts. The first chart is that little diverging pattern that I had mentioned, and it's a really cool tool and technique if you are going to trade, especially if you're going to counter trend trade or you're looking for a reversal inside of the treasuries, and it is using the stochastic, just simply the stochastic oscillator out there, and you're using it. The setting there is a little bit different than most normal settings, John. You set it with 14, 3, and 3 out there. And when you do that, what you're looking for is the oscillator. In this case here, works great at buyable bottoms and sellable tops out here. You're looking for a descending tops not price oscillator, a descending type stochastic oscillator, which is in place as we speak right now. Now, ordinarily, I would say that's a good thing. But you also have to say, hey, where do you get the signal that the actual top is in? One, you'd look for a bearish reversal signal, but you've got this little trend line out here to pay attention to, and it has not broken that trend. So you're really looking for that trend to be broken. The other thing that I'll mention to you, and you probably will say, how did I pull that out of my, bag of tricks? You thought I was going to say something else, didn't you? But so we're going to go look at my bag of tricks out here. I'm looking at the 10-year Treasury yield. You can do it on whichever Treasury yield you want, whatever term you want. But actually, there is a correlating pattern between the direction of the Treasury yields and light sweet crude. So what does that say? Right now, we know light sweet crude has not made a reversal, but I think it's getting close. So if, in fact, it gets close. Now, the correlation looks like it's off by a few weeks or so. Sometimes it's like right to the days, but other times it looks like it's just simply shifted by a few weeks. Now, if it truly is shifted by a few weeks, just simply because the price of oil has been going down for the last several weeks, it could be that treasuries have more room to run to the upside out here. But because you trade treasuries, you trade in the TBT, I'm going to give you two other things for you to consider and take a look at yourself. Because it's an uncanny thing there with regard to, why is the Treasury yield impacting light sweet crude? Or why is it a leading indicator? Or why is light sweet crude, really light sweet crude is more the indicator for the Treasury yield? I don't know. I haven't figured that one out. Or you might just say, hey, maybe you didn't pull it out of your bag of tricks. You pulled it out of something else, Steve-O. I don't know. So that's the best that I can. Now, what questions have I posed for you? In that analysis, that brief analysis?
No, I can watch the crude. And,
okay.
That'll give me an idea.
Yeah. So watch those swing points. You're swimming upstream at this stage. That doesn't mean the trade won't work, but you just haven't seen the reversal that you need in order for this trade to work just yet.
Okay.
All righty. Hey, John, thanks so much for calling in. We appreciate it. Have a good summer and enjoy your stay up in Kenosha.
Thank you very much.
You bet. We'll be right back, folks. The Dow presently up 67, S&P's up 9, Composite up 37. This is the end of the show. Stay tuned. Our man David White is up, and I'll be with you tomorrow afternoon. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.